Many people go broke with great wealth. The same goes for ordinary people. They go broke with little money. But what is the reason? Why do both the rich and the poor go broke? In fact, there are many reasons for this, but we will talk about the most basic ones. And if you don't want to be without money, here are 8 points of a person without a future. Poor financial management. Poor financial management starts with a lack of budgeting and spending planning. When a person doesn't keep track of their income and expenses, they may not realize how much money is spent on unnecessary things. For example, regular coffee purchases, eating out, or impulse buys can accumulate and add up to a significant amount at the end of the month. Without a clear spending and income plan, a person may not realize how much money goes towards mandatory payments such as rent, utilities, and loans. This causes important payments to be missed, which in turn leads to penalties and additional expenses. In addition, the lack of a financial plan can lead to a person not saving for the future, leaving them vulnerable to unexpected expenses. High debt. High-interest loans, mortgages, and credit cards can accumulate quickly if not managed properly. The interest on the debts grows, and the person ends up in a debt hole that is difficult to get out of. Often people take out new loans to pay off old ones, which only makes the situation worse. As a result, instead of reducing debt, it continues to grow, leading to even more financial problems. For example, if a person takes out a loan to buy a car but doesn't factor in all the associated costs such as insurance, maintenance, and fuel, they can quickly find themselves in a situation where their income doesn't cover all of their obligations. It is important to realize that each loan has different terms and interest rates, and if one does not consider all of these factors, one can easily find themselves in a situation where loan payments exceed income. Unforeseen expenses. Medical bills, accidents, and other unexpected expenses can be a major blow to finances. When a person doesn't have a financial cushion, these expenses can lead to serious financial problems. For example, a sudden illness or injury can require significant medical expenses that were not budgeted for. Also, accidents such as car or appliance breakdowns may require immediate repair or replacement, which also requires significant expenses. It is important to have an emergency fund to help cover such unexpected expenses and avoid debt. Job loss. A sudden loss of income can hit finances hard. Without a steady source of income, a person can quickly deplete their savings and find themselves in debt. For example, if a person loses their job and does not have enough savings to cover their expenses for a few months, they may find themselves in a situation where they have to take out loans or borrow money from friends and family. This can lead to debt accumulation and a worsening financial situation. It is important to have a plan in case you lose your job, which includes building an emergency fund and finding alternative sources of income. Low income. Not earning enough to cover basic needs can also lead to financial hardship. When income does not cover all necessary expenses, a person may find themselves in a situation where they have to choose between paying bills and buying groceries. For example, if a person works a low-paying job and is unable to find a higher-paying job, they may find themselves in constant financial difficulty and unable to save for the future. It is important to look for opportunities to increase income, such as learning new skills, upgrading skills, or finding additional work. Investment mistakes. Improper investments or fraud can lead to significant losses. For example, if a person invests in high-risk assets without properly understanding the market, he or she can lose a significant portion of his or her savings. Also, scams such as pyramid schemes or Ponzi schemes can result in a complete loss of invested funds. It is important to do thorough research and consult financial experts before making investment decisions. It is also worth diversifying your investments to reduce your risks. Divorce or separation. Property division and alimony can be financially burdensome. Divorce often involves significant legal costs as well as property division, which can result in the loss of a significant amount of assets. For example, if a couple divorces and one spouse is left without a home, he or she may need to rent or buy a new home, which requires significant expenses. Also, alimony and other financial obligations can significantly reduce income and increase expenses. It is important to think through the financial implications of divorce in advance and try to resolve issues amicably to minimize costs. Addictions. Alcohol, drugs, or gambling can lead to significant expenses. Addictions are often accompanied by uncontrolled spending that can quickly deplete all savings and lead to debt. For example, a person with a gambling addiction may spend all of their money on bets, hoping to win, but end up losing everything. This can lead to financial problems, debt, and even bankruptcy. Addiction treatment is also costly, which can make the financial situation worse. It is important to seek help and support to fight addictions and prevent financial problems. These 8 causes often lead to financial hardship and ruin. It is important to understand them and take steps to prevent these situations to ensure financial stability and well-being. Which view affects you the most? Write in the comments.